Whole of life insurance and inheritance tax planning. If you're doing your research online, you've watched any of my videos, you will know that a whole of life insurance plan can be one of the very best ways to approach inheritance tax planning. Okay, let's break this down. In the UK, £325,000 per individual, £650,000 per couple. Anything outside of that, plus a little bit of exemption for main residents, will be taxed at 40% by the UK government. Now, for a lot of clients, that is the very last thing that they want to do. After decades and decades of paying into the UK system, they do not want to pay a higher amount of tax. However, when you actually go one step deeper and further than that, it's not really that you just don't want to pay the UK government tax. What's more important is that you want that money, or as much of it as possible, to pass on to your beneficiaries. So this is where life insurance or whole of life plan can be extremely valuable for clients. Effectively, what will happen is with a whole of life plan, as you know, you pay your contributions. As long as you pay your contributions and as long as you don't lie on your medical examination or report or paperwork, the plan guarantees to pay out in the event of your death, whether that be this year, in 10 years time, in 30 years time. So the connection with the IHT planning comes by basically, here at Cameron James, we work out for our clients using our Voyant cash flow modeling tool, what is your expected IHT liability now, but also projected in the future. So for example, you can model at age 70 or 84 or 100, what would be your projected inheritance tax bill, i.e. your value of your house in the UK. Okay, it's worth £1 million if you're fortunate enough. If it's going to increase by average of 3-4% over the course of the next 10-20 years, what will it be worth in the future? And obviously, what will your savings and investments be worth? What will your ISAs, your pension, anything else? And obviously pensions from 2027 will also start forming part of your estate for inheritance tax planning, as per the autumn budget at the back end of 2024. So effectively, you can work out what your IHT liability is. And when we talk about your liability, it's actually not your liability. It's the liability that we placed on your beneficiaries, your husband, your spouse, your husband, your partner, whoever it might be. So what you're really doing is future-proofing your beneficiaries or your loved ones, whoever it is, from having to deal with the drama that comes of paying inheritance tax. Now, I've got 5 tips or 5 things I'd like to run through with a whole of life plan. So the first thing is what I mentioned there about not having to sell assets. So the reason why it can be so valuable is that some individuals don't want to have to sell assets. Maybe you have a second home on the country in somewhere like Southwold. I'm from near Norwich originally. Maybe it's a second home, or you have a house in London, or it's where you've always been as a family. Everyone has memories there. Maybe from a financial perspective, you know it makes sense to sell that £1 million home and downsize in your retirement, but maybe you don't want that. Maybe you host Christmas, maybe you have the grandkids over, whatever it is, you like the big house, you like the garden, you like the upkeep, it keeps you busy. You don't want to sell that asset down. You want to pass that asset on to your kids or your husband or whatever it might be. So by having an inheritance tax plan in place or a life insurance plan, you can effectively have the premium that be paid out in the event of your death covering some, all, or part of the inheritance tax bill that would be due for your beneficiaries. So a whole of life plan can effectively remove that drama for your family and your beneficiaries. Now, this is extremely important, and a lot of my clients, obviously, I'm very direct to my clients. I say, this is a morbid conversation, but I will then go very firmly into when you die. It's going to happen. You have to prepare for it. The number of clients who are not well prepared for their death is astronomical. If you are the main earner, the main breadwinner, in control of the finances of your family, get this sorted. It's not fair to put that responsibility on your family or on your children, going through probate with the government. Obviously, as part of that, you should be having a will and lasting power in place as well. We've got lots of videos on that on the channel. But having everything organized means when it comes to them losing you emotionally, which will be a big distress for them, at least financially, things should be smooth and easy. Not to say there won't be anything that's required to be done, because you still have to go through the processes in the UK, but it can be a lot easier. The second point I'd like to talk about here is that whole of life plan is effective immediately. Okay? So once you reach out to us, once we go through the review, once we compare the market, we find out the policy that works for you and your family. Once you fill out all the paperwork and you start working on it, you pay your premium, it becomes effective immediately. Now, that is pretty sizable. So if you have a big inheritance tax bill and you've been thinking about it for some period of time, you haven't taken the action, you haven't done any steps, you don't know what to do, you can solve that by taking out a whole of life plan, and straight away, as soon as you completed the plan and you've been accepted by the provider, you will have the coverage and it will pay out. Now, in the first 12 months, sometimes there's slight technicalities of if it's suicide, if it's this, if it's that. Within the first 12 months, obviously insurance companies have been a little bit careful for trying to spot something which they've been trying to take an advantage of. But other than that, an insurance policy will pay out when it's a whole of life plan. The third thing I'd like to talk about here is that the funds can also generally be released before probate in the United Kingdom. Now, probate is effectively the government process that you have to go through in order for the government to ensure they get their slice of meat, so to speak, of their 40%. So an inheritance tax or a life insurance plan, whole of life, if you're using it for IHT purposes, could be paid out before probate, which is extremely useful and valuable for your family. Otherwise, if your family were to get through probate and they said, right, the bill for inheritance tax is 1 million and your life insurance pays out at 1 million but didn't pay out first, it would be a very difficult situation for them because they would possibly need to sell down assets, etc., before the money from the life insurance comes through. The fourth thing is to mention that you can have IHT-efficient premiums. There's certain bandings in the UK that can be used, and the terminology is the normal expenditure out of income gifting exemption. So it can also be quite tax efficient in the way that you make your contributions, and you'd obviously need to discuss that with ourselves or one of your financial advisors here at Cameron James. Also with life insurance, indexation can be included, which means over the course of time, obviously the premium will continue to, well, the premium can stay the same and the term, the value amount you can receive can be increased, but normally speaking, it will come at a higher price. I hope this has been a good video for anyone considering protection. If you're a new client or an existing client, reach out below for a free consultation with ourselves. Again, there's no cost of going through a protection analysis with us. We'll find out what your needs are, what your IHT liabilities are, and suggest to you which policies, plans, premiums, whether it's term assurance or a whole of life, whatever's most suitable for your family and your needs for you to make an educated and informed decision. And as always, guys, take care of your UK pension assets.